Yes, S&P Global, one of the three major credit ratings agencies, has affirmed Australia's credit rating at AAA, but they have kept it on negative outlook, which means they believe Australia is facing some fiscal and economic risks that could slide to the downside. But S&P have obviously taken a look at the recent federal budget, and reading through their report, they like what they see. They say in their report the large economic stimulus packages will support Australia's economic recovery, but fiscal deficits will persist and debt levels will be elevated for years to come. S&P say within the next 2 years they may downgrade Australia's credit rating further if the COVID-19 impacts the economy more than they expect. But conversely, they also say they can bring Australia's credit rating from AAA negative to AAA stable if Australia's economy recovers better than they expected. They mention the federal budget and say Australia's budget deficit in FY 2021 will be about 14% of GDP this financial year, but by 2023 it will only be 4% of GDP. So that's good news for the economy. The rating from S&P comes just a month after Fitch and Moody's both rated Australia's economy AAA as well. And why is a AAA credit rating important? Well, it means investors have lots of confidence in the Australian economy. They will happily lend Australia money because they know we're very likely to repay that debt. Ash.
Yeah, and a bit darker news though, the latest stats showing today that the jobs market took a backward step in September.
Yes, the latest stats from the Australian Bureau of Statistics show in the fortnight to the 3rd of October, payroll jobs declined across Australia by 0.9%, whereas the fortnight before that, they actually went up 0.5%. So the jobs market took a bit of a backward step in the last couple of weeks of September. If we look at this chart, you can see the comparison here between Victoria and the rest of Australia. And focusing on that last little bit there around the 26th of September, you can see the jobs market has dipped a bit. And I don't think this bodes very well for the October unemployment numbers. September's numbers came out just last week and it showed unemployment rose from 6.8 to 6.9%. The federal budget papers are predicting unemployment will reach 8% by the end of the year. So if that trend continues on that graph and it does continue to decline into October, then I think we can expect to see the unemployment rate in October rise a little bit more, Ash.